Albanese and Chalmers unveil capital gains carve-out for small business and startups. What seems to look like a backflip, bro. What is it? What is it? What's popped up in the last 48 hours? Who does it affect? Is it a marketing ploy, or are people actually going to benefit from the seemingly reversal to a small amount on some of the CGT changes?
Yeah, I've kind of been thinking why, like you never know. And this is probably the main thing I've been thinking about. Like, did they kind of have this under the hood already? Were they going to roll it back? Like, I don't know. Like, there's a bit of
Trump, right? How Trump goes, yeah, we're gonna build a wall and get Mexico to pay for it, and then he says something outlandish, and then pulls it right back and says, oh yeah, no, we did 7/10 of it, knowing that the greater public's not going to accept or believe what they're doing again. These guys aren't Trump, but you can see that in politics where they come out and they say something that's not going to happen, or something's probably not going to be accepted, or sort of sell the worst case and then pull back and go, hey, look, can you guys swallow this? Is that it, or what are you thinking?
Yeah, I don't. To be honest, I don't think our government is brash enough to do that. I think they genuinely thought what they rolled out was the bullet, was the winner, and I think they've just had so much pressure, probably obviously from social media and media and people in general, but a lot of small business groups around this, because when it all got rolled out, it was all about property. So the capital gains, as was kind of we discussed and other people have discussed, the changes to the capital gains were across everything, including shares, including which a lot of people don't realise is shares in business holdings, that they own. It doesn't have to be listed on the stock exchange. So that was going to potentially hurt a lot more small businesses more than I think they initially thought. So I think genuinely they have. I'll give them some credit. They've probably listened. I don't think they rolled it out to then intentionally roll something back and go, oh, it's a bit of a win. I think they've actually copped a fair bit of heat.
And when you say probably listen, they didn't actually go to the market earlier and say, they didn't go to any professional boards or bodies and say, hey, what do you guys think of this? And should we do this or anything? So when you say listen, they've come out with this, dropped the bomb, and then they've come back and went, oh, we're losing a bit of confidence here. We make another one, move or two, and Pauline's going to be the Prime Minister in 2 years' time. So, let's pull back and win a few seats back, hypothetically.
Yeah, I think so. I definitely think so. And she has been, she's been a huge pain in the ass for these guys. Like, I think, she went to National Press Conference and National Press Club Conference, I think the first time in 15 years, or like she hasn't done that for a while, and she lit it up. There was some fairly direct hits and figures, and I know this isn't to do with what we're talking about, but I mentioned to you yesterday the stat, an extreme stat of was it 35% of parents said that their children go to school hungry.
35% of parents said their children had gone to school hungry. Which,
like, literally, I'm getting goosebumps. That is so bad in Australia. Like, I get it, that's bad in other countries. I'm totally aware of that. But as we stand isolated in Australia, or as an island nation, that shouldn't be happening. So she's been a huge pain in the ass for the Labor Party, and they keep batting it off like, nah, she didn't. Did she raise the money and all this? Like, no, they're threatened by it, and they had to change something. And I think this the small business community, they dropped this bomb, and it was the same with the construction. They just pretty much, they would have had all this modelling and all these internal advisors to give them all these figures, but they never really actually go and do a pulse check on the people who it's going to affect. So they dropped this bomb, and then all hell broke loose. And I think if they had to reverse this on property, that's almost worse than dropping the bomb and leaving it, because that would just undermine their entire policy. So they've gone, all right, well, how do we win some votes back, or how do we admit that there might be some fault? We're not perfect. Let's go back on this. So
what is this that they're going back on? What are the two?
So basically, in terms of that capital gains, the change in the capital gains tax, what they're allowing the current, as far as I believe, and this will change because again they drop these and the actual policy documents around it don't come out, and there could be differences. But basically, they're allowing from what I believe, they're allowing the 50% capital gains tax model to stay on businesses, and they actually had some already, but they're allowed certain businesses on a revenue basis. They will be able to continue with that 50% capital gains tax discount, into the future. They're not going to have that indexation model. That's pretty much. But on that, so the 50% extra capital gains tax for small businesses will be extended to those with a turnover of up to 10 million instead of 2 million. Up to 2 million is 91% of businesses. 10 million is 98. So it's only extending it to cover another 7% of businesses. Who gives a shit? I guess the people between 2 and 10 million, great, they do. But it's not really doing it's a nothing headline. Yeah, agree. And so going back, what they've done is, again, put something out in the media that makes them look like, yes, we've listened, but again, they put something out in the media that probably does stuff all. It's like the whole, let's do this negative gearing changes for people that have got, over 2 properties and whatever. The actual fraction of the economy or the people that are in this situation is, like you said, 7%. And how much of the other thing is they have to actually sell these businesses for any of this to affect. So that might be 7%. Some people might not sell the businesses. I don't know the stats on how many businesses in that difference will sell, but a lot of businesses don't sell for years, if at all, and then they wind them up. So there's no CGT anyway.
Yeah. So again, pretty much a nothing headline. The other thing I heard that come out of it, they said something to do the changes with trusts. So what were they?
Yeah. So that's we need to be careful when we say trust, because it's not just, the big thing was the discretionary trusts of, you've got to distributing out your income. We've talked about that in prior episodes, link in the show notes of how that all looks. But basically this is more specific to your testamentary trusts. So a trust that's put in, or there's certain information in the trust deed that is specific around when ownership is transferred after death. So this was people basically, they rolled out this 30% minimum tax on trust distributions to all trusts. But what that pretty much meant was it's basically a death tax, because, as soon as you transfer that property that's owned in a trust to your kids, they're going to then get hit with this 30% tax. So it's an inheritance tax like they've got in other countries. They've wound that specific part back. This isn't for any other discretionary trust or any unit trust or anything like that. It's purely testamentary trust. So it's got to be specified in the deed that, if this property gets handed down, that it's for, and if that's not put in your trust deed, you'll cop it. Because the discretionary trust is still the same kind of base setup. Whereas there's things you can change in these trust deeds or the document that specifies the rules of that trust. So that's what they've wound back there as well. Again, who does that affect? Hard to say how many people, because again, how many people are holding properties? There are people holding properties in trust that will hand them on to their children. But again, it's probably not a huge amount of people. So probably more so a media ploy than anything, right? So it's really not going to affect a lot of people. It's not going to. Great, the people who it does, excellent. You've had a small win, but more than anything, it's a marketing ploy. Yeah, I think so. And they talked about the other thing is that they have rolled this out, and I can't remember the exact figure of how much they think that they would lose. Did you see that? How much?
Yeah, 475 million over 4 years, which is just that's a pure speculative. Like if you read into that number, that's this how they substantiated it is pretty thin.
That's now going to affect this. Like when the budget came out, it's like we're increasing in our debt. Well, is there any talk or any modelling of, all right, like it's not just going to all of a sudden increase our debt by 475 million or whatever it is. Like everything's got elasticity, so there's nothing to say, all right, we've wound this back. Like this budget was a huge tax grab, and now they're kind of giving some back potentially.
The budget was a massive tax grab into the multi-tens of and hundreds, potentially billions, for 475 million potential rewind on a 4-year basis is 475 mil is a big figure for us to think personally, but it's relative to the rest of the budget changes, it's dollars and cents.
So what do you reckon they should have done if you were gonna wind something back? What would have you wound back?
Look, if Angus Taylor come out and said that they should scrap the whole thing, I think One Nation, pretty much in favour of that. So, anywhere between there, and if I want to be popular, I'll be like, yep, I agree, scrap the whole thing. But no, look, I think, if they're going to keep negative gearing, I think we've said this on the podcast, we've set it off as well. I try to keep it condensed. They approached it wrong. They could have done, where I think they should have done a dollar value, right? So negative gearing, sure, could it have changed? Yes. Instead of going, hey, we're abolishing it and we're doing a capital gains, like that's too big. That's too big to do two things. You speculate. Property investors are somewhat happy to take a smaller rental return, keeping the rental prices down, accept negative gearing in the thought that the property is probably going to appreciate in capital growth. Since the high, all these things that have been happening in the economy in the last 6 to 12 months, and then the negative gearing changes and capital gains tax changes, the forecast for property price growth is pretty dull in a lot of circumstances. There's some that's quite attractive, some are negative. So if you're now looking at property going, hey, look, I don't expect there to be any capital gains 1, 2, maybe 3 years in the future, and also I cannot offset the losses, essentially in that investor's mind, the discount that I'm giving on the rental property, I cannot offset that. And I don't think there's going to be capital gains. Just too much. Why would they invest, basically? So we don't think it's as dire as that, but the point being is they've come up with too many things. So what I would have done, okay, if they're going to touch negative gearing, make it a dollar amount. I don't know what that dollar amount is because, I haven't got every bit of data point and everything, but whether it's 20 grand, 50 grand, 100 grand, doesn't really matter, right? But make it start with that, right? So go, hey, okay, guys, you can negatively gear 100,000 or 200,000 against your income. By the way, anyone before, grandfather existing rules, but anyone going forward, you negative gear, whether it's existing properties or new properties, this amount here. If that wasn't enough and they only done new properties, look, I think the combination would, it have to just be a dollar amount. It can't just be properties either. So you can't say, I'll do it to 2 properties, because what's 2 properties? Like if you've got a $10 million, two $10 million houses and someone's got, 2 1-bedder apartments in a rural area, like that's not the same. So it's got to be weighted on dollar amount. That's the thing with negative gearing. I would have picked between the two, capital gains tax changes or negative gearing. I personally would have changed negative gearing. I think something did need to happen. Completely sideswiped by the capital gains tax change. It's too
because it affects multiple different industries, right?
Absolutely. So
it's like we've seen, whereas negative gearing is literally just investment properties.
Yep. I listened to a really good podcast by Carl Stefanovic actually the other day. I forgot who he had on, but it was in particular around single stocks, and this guy broke down the budget and is going through the impact. We can find and put in the show notes. And he had the impact on single stock investing, so single share investing, and how the tax changes absolutely kills basically any speculative growth stocks in Australia, like small companies and startups. and he went down, drilled down, showed us a report and stuff. So I haven't completely fact checked him. I sort of relied on Carl's viewers and anyone on that, on that YouTube channel to do that. And it didn't seem like there was too much negative press. But if what he said is true, it did make sense. Like, that CGT change is just, we used the analogy before, taking a hammer to the situation. This is a sledgehammer. This is getting a bulldozer, driving over it, doing reverse, and then getting out and kicking it to make sure it's dead. Like, it's really just annihilated it. So what I would have done, negative gearing, and I would have made a dollar amount, and I would have started with that. And I also would have went out to, went out to property groups. I would have went out to, the tax advisory boards. I would have went out to small business groups. I would have went out and actually spoke to them about it. Hey guys, here's the issue. What do you guys think? It's just because you've been voted in, you're top of the tree, doesn't mean that you've got all the right things and you can go out and just make decisions for everyone. So I'm not running for office, and I'm not trying to make a statement to become the Prime Minister, but I think that would have been a better approach, and certainly something we could have supported. What do you think?
Yeah, I agree on just doing one thing, negative gearing. If that was one, I think you probably hit the nail on the head there. The sledgehammer or the bulldozer on the head there. Just do one and actually see how that affects things, because I don't think I know there are certain markets at the moment, Sydney specifically, that are pulling back, but then because of these changes, right? Because of these changes, how far they will go, I'm not sure whether it will affect it at all. But I think I saw the other week that rent isn't decreasing, so it's still putting pressure on people. No. At the living, cost of living. So huge, like whether just negative gearing would have had that impact, I'm not sure, or whatever it would have been received better, I'm not sure. But yeah, I think it's just they've just taken their power and rolled these things out, whether they preempted it or not, and then now, they're kind of trying to make themselves look like they're in a position of knowledge and a position of that they've got the Australians' best interests at heart. But then everyone sees through these headlines and goes, it's going to do nothing. It's not going to change this is not going to change the property market. This might help a handful of small businesses.
It's going to change small sections potentially. But what's is it going to fix, when we think of the property market, the underlying issue is affordability and supply, right? So will that change that? No, not really. You can speculate that in some overhyped or expensive, we'll call it expensive areas, and they're expensive for a reason. It's because they're highly desirable to live in. Bunch of other factors as well, but will some of those areas, and namely Sydney, will it come back down? We expect it to, but it doesn't help supply. Artificially bringing down prices and somewhat doesn't mean that someone's going to have to sell and then they're going to move into a tent, and that means there's another one available. Like it, sadly, if that does happen, obviously in other situations, that's you've totally missed the point. But it doesn't fix the problem. Which
I think there should have also been a bit of give and take. Like I think Matt Pocock mentioned about the household income splitting. Like the income tax, the PAYG income tax in Australia is just crazy, and to not have things, policies in place for household income splitting. So basically, to elaborate on that is, say the main breadwinner in the house is on $200,000, they're going to pay more than if more in tax, a high marginal tax rate than two people in the household earning $100,000 each. Basically, what that household income should be brought in $200,000, and they go, okay, there's two adults in that household. Let's let them spread their tax. So,
and that's something we've spoken offline a few times, and I think, look, let's roll that into an episode next time, because there's that, like, there's progressive Nordic countries that do that, right? So, like, especially for young families. So it's like, hey, if you are a couple and you're working, you don't pay tax for the first, whatever, 60, 80, and sometimes combine, like, $120,000, $150,000. I think, we can go into those policies. I think that makes a lot more sense than sort of penalising you for
it's just more well received then. Yeah, if you're taking, like, these people are still, and I won't go into it. We'll do an ep on it, but if you're taking, like, those people are, that are affected by this, that have these properties, like we've mentioned, the ones that it actually affects are still income earners. They're not just retired with 6 properties that probably aren't being affected anyway.
Most
they've
got
jobs.
Earners,
yeah, mostly. So they're the ones that are affected. So, all right, we're grabbing your tax here. We're actually alleviating it here. And again, this is probably back to the ep or two ago when it was about bracket creep, like overhauling the income tax, the actual personal income tax on wages is probably more pertinent. And that could have been done if they were to whack in 2 big things, reverse something else, but they wouldn't make as much money.
Yeah. So look, and a preface for next episode. So we'll build around alternatives to what they could have done, instead of doing what they've done. So, they are, just as a couple of key highlights, like, we've spoken about it offline, but what you just said about the income tax changes is certainly making it, looking at a family basis, not just individual. There's consensus night 2021, there's 1.04 million houses completely empty. So, potentially looking at a levy on that, or, and other things that we thought on that. There's making large parcels of land. This will be also a bit of a contentious one. Large parcels of land that are in really key built-up urban areas. So let's just say, I'm going to use a silly example. You own a farm in the middle of, Newstead, in Brisbane. You still own, a 50-acre cattle farm. Basically, the idea of the notion that, hey, look, the rest of the area's built up around you, the rest of the city's gone, and that's appreciated your block. It's not really a farming precinct anymore, so kind of been given, look, I'll just say it, coerced and forced into making a decision on that property to develop it. So, we've spoken about this. We'll go through what we think about it. As well as the more forcibly changes to built up areas as well. So, like, currently it might be single story, and then implementing, say, a 3-story, 5-story higher in particular areas. There's a couple others too. So they're all fairly controversial topics, let's say, because essentially when you have to hand down a budget because your country is needing more money and it is broke, you need to do things that are probably unfavourable, but they have to also be somewhat accepted. So they could have been lobbied, they could have been voted on, they could have been sent to the public, they weren't. So, we've got some really good alternatives. But anyway, we are going beyond what we originally wanted to talk about. So let's wrap that up here. Next episode, like we said, controversial means and topics about alternatives that we could have done instead of negative gearing and CGT changes. And then also by sort of popular request, episode after, if you want to stay tuned, please stay tuned. Tune in. We're going to go through borrowing capacities, and it might sound boring at the time, but how you can actually get bigger borrowing capacities utilizing complex structures as well. So it's again probably a contentious topic, because in the past there's been probably, how should we say it, shit brokers who've come out and did this really poorly, and the knee-jerk reaction from a major bank was to completely change their rules and stop lending to trusts altogether. So which was 8% of their lending book, which is enormous. So we're going to go through there, explain what you can do ethically, morally, but to increase your borrowing capacity beyond beyond what you could probably perceive as your acceptable tolerance. And we'll go through what other clients of ours have done to capitalise on that in the past. So definitely stay tuned for that. Something we're very well versed on. We do every day. So cool. Brodie, thanks for your time.
Thanks, mate. Good hustle.